Hey folks, welcome to the Market Internal Review for October 11th, Wednesday 2023. Not a whole lot for me to say on this day. We had FOMC minutes and a handful of Fed speakers. Not really too much of a move, I would say. If you look at the daily chart, we basically closed where we opened, but I'll quickly go through what I noticed throughout the day. Basically, we had a dollar gap up, and quickly, once we got the day started, right here at the open, previous session first standard deviation range here. So I've been looking at this range and giving it a lot more importance to my intraday trading. If we don't break that range, if we open up within that and we don't break that range, that pretty much is a no trade signal for me. Obviously, there can be good opportunities within this range, especially if it's quite large. This one actually was decently large. Almost $2.50 for SPY. That's pretty good. You can see I've got some alerts set here. So I set alerts at previous TWAP first standard deviation low and high and midpoint. We also have September's TWAP right here, and that's actually what I was looking to see if we would maintain. I don't know that I have. Yeah, I don't have my ranges indicator on today for this, but I'll start to add that. But you can trust me here. September TWAP price was right here. Yeah, that is 436 and change. You can see we broke over that yesterday, and we couldn't hold it. Right, we had that TWAP first standard deviation high breakdown, break and retest before we dumped to TWAP and somewhat down a little bit lower, but that engulf was right back through that September TWAP price. And that is what I was watching like a hawk, right along with this first standard deviation high from yesterday. And that is where we rejected a collection of equal high wicks right here. We lose TWAP and we lose first standard deviation, albeit this is all with very strong bull tick. We're making lower highs, but you'll notice the exchange, we've got add and vold both in the bullish area, and the trends are somewhat all over the place. So just given that we had the FOMC minutes and the speakers, I was also watching the options chain, the expected move, and the volatility in the contracts really was not decaying. So it just seemed like perhaps there was going to be some kind of erratic gamma type squeeze or movement. So I didn't trade much today, but this is what I noticed. So this, could be a decent opportunity. That being said, we also had this gap here. So there just wasn't a lot of range that I felt was worth putting risk on today. Seeing a couple of good rejections here of TWAP, both here, but again, you've got this daily gap range right here. And you can see the market basically stayed within this gap zone from the time it entered to the time it left. Was that over 2 hours? And it's about $1 range. So that's just brutal to try to trade with options. Maybe like a leveraged ETF that tracks the SPY, but it's just not interesting to me. We also had a handful of periods where there was almost no tick, break 500 high or low. That was actually, oh gosh, I think that's about an hour. Yeah, that's exactly an hour and 5 minutes or so. Then we also had another period like at here. I mean, that's almost an hour. Lots of little pockets of just no tick action. I mean, even here, yes, there technically is a couple of break highs on the 500, but I mean, that's nothing. And it's all equally balanced. You can see the tick bear low, below zero and above zero. For the bull side, it's just nothing. And look at the average tick closures. It's basically flat. Mercy's showing a very muddy trend, if there's one at all. The only thing that we really could say as TWAP traders is, maybe we had a couple break and retest of first standard deviation low to try for TWAP or a full mean reversion. But we really didn't have a trend balance, the yellow dots on MIT. We didn't have that indication here. We had trend imbalance. And given the trends for price and volume, the safer, quote unquote, safer trade was the downside. But, again, just very muddy. So, really rough trading today. You'll notice we've got all the price within the previous day's high and low. So, this is an inside bar, and effectively a hammer candle is what we ended up creating, given that we're open. Well, I guess, yeah, we opened here, we closed here, so we did close slightly higher, and then all this would be a wick on the daily chart, which you'll see in a little bit. But the one other clue to what may be in store for the day was actually, if I can find it, is the ad chart. So the ad chart, we had the 200 SMA up in the strong bull zone from yesterday. But look at this near perfect 1500 rejection on the ad before 10 o'clock. So we spent all of that time spies trading in the daily gap zone. We finally broke down low below first standard deviation low on the TWAP, and we'd spent all that time selling off the entire New York composite until about 1:30. Shocker, 1:30, and then that's when we start to see that rise. We did cross back over to 200 before we closed the day, but I mean, compared to the previous couple days, I mean, you can see it down here in the histogram for the accumulation. I mean, there's just no comparison between these 2 days, none at all, even the past couple days. So I think it was expected. Honestly, we've gone higher than I expected overall since last Friday. Actually, VIX, we're back down to 16. We hit almost 20 a couple times, and then that was it. No more 20, no more almost 20, no more 19 and a half. We're all the way back down to 16 again. So for somebody that enjoys a volatile environment, a volatile market, this ain't it. Which is why we have kind of this inside action and periods of basically no tick. Heading over to the multi-index view here with the monthly TWAP. Here you see that kind of ad price indication showing up here on the New York Composite. Almost looks just like the ad indicator, so no surprise there. We did bounce a monthly TWAP level. It's where we struggled earlier, and it's also where we struggled later in the session. And an inside bar for the New York Composite. So SPY and the Q and the Dow very much in sync. What I will say is the Q specifically was having repeated attempts at previous day high. Every time was rejected. I don't believe the other indices ever came close. SPY did not come close. Dow did not come close. I know the Russell didn't come. Okay, it was trying to break out, which I did call this out on X. It was trying to break out here. I think I called it out on X. It was trying to break out here early in the morning. So if it could have broke out, then I think we would have had a different day. But it did not, and it did not come back up over open price. You see, they failed the gap. We did make a little bit of a retracement, but not much. So Q specifically, I think maybe we could argue that tech was responsible for most of the upside momentum today. If you could call that momentum, I'm not sure. SPY was still decently strong, I feel. They just, I think, mainly were maybe fighting against tech and Russ, small caps market. It's 2,000 some stocks. Still a decent amount to move the market. Dow, I think, is essentially in the same bucket as Russ, not showing that they're able to close above the open. They didn't make any new highs or same highs. So they'll be the two that I watch for the rest of this week. We do have PPI coming up, I believe, tomorrow. Let me see here. Let's go to high impact only. Oh, okay. Core inflation. Yeah, so we have the inflation data coming out. So that will most likely have an impact. Forecast and prior are the same, and core inflation rate year over year is actually expected to go down. That could provide inflation rate month over month. So this could actually provide a little bit of a pump, but I don't like to really speculate on that because we don't really know how much the market is positioned for certain things. I've seen positive economic data result in the market selling off. So you got to be careful with that kind of thinking. So, anyways, small caps is something I'll be watching, and tech. I mean, that's basically what I've been watching for quite some time. Because again, as I've said in older videos from last month or the month before, I do think tech with is making most of the value of the market right now. You can go find some charts that would support that statement. Um, and small caps, mid caps are been hammered. A lot of retail services, discretionary, like a lot of those things. You go look at Dollar General or a lot of the retail that's having robberies, and I mean they're all just trashed in this market, and small caps as well. So heading over to the SPY daily chart, we can go look at S&P 500 with what percentage is over the 50-day, and we have actually broken out of that range that I mentioned in the last video. So we are at 31, almost 32%. And a subpar volume day on SPY, we only had about 62 mil volume. That is below the average. And you can see a lot of these RSIs are definitely starting to pump up. We're about midway, I would say on average. SPY is right around the middle. But we do have some of the funds that are starting to creep up more towards the, quote unquote, overbought territory. Looking at growth has actually run up a lot more. Now this is the 20-day average, so it's not as much work to get over the 20 as it would be the 50, but this is specifically growth. So you can see as we're collecting those low wicks on SPY, growth is pegged at the lows, and now we've gone from just October 3rd, last Tuesday, from 4% of stocks, growth stocks from S&P 500 above 20, we are now at 56. We're about midpoint. So there could be a little bit of a pullback here, and that would be substantiated, I think, by the fact that many times here lately, when growth has hit this area, we have seen a pullback. So I don't know. That's speculative, but still something to consider. SPY daily chart. So a couple things. Tuesday, October the 10th, we pegged the midpoint dang near to the cent. I think we were 1 cent off. And I might not have this measurement completely to the wick of these two daily candles, but we have this daily gap back from late September, and we pegged it right here on Tuesday. Our high price was the 50% of that gap. So if you've watched my channel, I love 50%. Here it is, 50%. We've extended. Admittedly, we've extended way more than I thought we would have. We are starting to see, I think, some hesitation now as we're into. Definitely, this is a bounce point before. We blew through this and had that overnight gap down right from this range where we bounced the weekly trend. And this is right when we flipped the 20 and 10 SMA. And that's right back where we're at now. So a big contention zone as far as what I look at. And yes, we've got, relatively equal lows down here around the 200, but I still am watching this 426 area. I mean, we are far away from it now, so it might not seem like that's a possibility, but with everything that's going on globally and economically, I don't think it's out of the question. So this candle was very interesting to me to see this day form. We still have inflation information coming out. If upside is going to continue, then I would be looking to see 437 and change that midpoint there. I want to see that break. Obviously, then 100 SMA is basically right here, so that could provide some kind of reaction. So those are the things I'll be watching for upside, for downside, barring any kind of gap that would break us through under or over these things, 20 SMA, and then this candle range here. I mean, even 50% of this candle here could be just as impactful before we hit here. And I'm not going to run the tool over it, but that would be roughly, well, 430 on the nose. So that's a psych level, as a lot of people will say, a whole number. So that's kind of the things that I'm watching here. We still got this monthly trend line that we broke below. It's a decent break below, but I'm not going to consider that trend line invalidated. Might need to be moved a little, but it's still pretty solid. So watching tech, watching Russ. To finish out, go look at the volume. Volume basically balanced. We already looked at add, tick, mostly balanced. We already saw from MIT. Indicator and a little bit of accumulation upside, but look how noisy it is here at the end. Yeah, not much else really to write home about. I'm just going to keep it easy as we release all this data. And as always, thank you for watching and happy trading.